Joining us now is Stephanie Link, Hightower Chief Investment Officer. She's also a CNBC contributor. And Stephanie, that old expression, it's quiet, too quiet, that's kind of where we've been in terms of inflation numbers recently. The risk has been, or the concern has shifted to maybe worries about growth in the labor market. Is there any way we could have inflation fears rekindle that's not on anyone's radar, or probably not?
I don't think so, Joe. And we've made a lot of progress. Maybe we just kind of stay where we are. We peaked at 9.1% in inflation, and you're now running at about 2.5%. Maybe we just stay at 2.5%, but that would be fine, I think, because we're really close to where the Fed wants it to be. More importantly is going to be tomorrow when you have the initial jobless claims, because we know that they have pivoted away from kind of the fear and the focus on inflation, more on labor. And that number probably comes in at about 229,000 for the weekly initial claims. If you look at the 4-week moving average, Joe, you're at 240,000 in initial jobless claims. Recession is more like 350 to 375. So we're nowhere near that. But, kind of just stepping back for a minute, September, we know, is usually an uneven month, and this year is no different because there are just a lot of uncertainties. You do have some concerns about growth slowing. Growth is slowing, but I don't think you're going into a recession. You're running at about 2% GDP. You've got the tech unwind, you've got the elections. And oh, by the way, yesterday was fascinating with the banks. I mean, if you look at some of the banks yesterday at a conference, we're talking about really disappointing trends. Ally with credit challenges, Goldman with trading being down 10%, JP Morgan being their typical conservative, saying NII and expenses are too high for next year. And then you flip it around. You then had Brian Moynihan talking at Bank of America, talking about reiterating net II and increasing for the fourth quarter in terms of NII, and talking about no issues with the consumer, no growth slowdown. Morgan Stanley's talking about an M&A pipeline that's accelerating. So you talk about cross currents. You have haves and have-nots in the banks as well. So a lot of unknowns, a lot of things to pick and choose from. But I do think there's opportunity. You do.
Okay. I mean, there's always opportunity when there's some, when things pull back from really incredible levels, like Nvidia's down 23%. Maybe that's an opportunity, or maybe it's another warning sign about things. I mean, when Buffett has so much cash, that concerns me. When JP Morgan goes down $11 in one day, when oil can barely get out of its way at $67 a barrel, it's when you have a bad week like we had last week, and it's the month of September with October, as it usually does following September. I can give you a lot of things that I could lose sleep over, thinking that maybe we're getting set up for some type of October low again, based on growth concerns.
Well, we could, Joe, but, the market always climbs a wall of worry. And you and I have talked about it. I worry when I don't worry, because that means we're being complacent. So you have to pick and choose. I think now more than ever, you are seeing opportunities and stock picking. You're getting rewarded for it. You talked about Nvidia being down so much. Yeah, but guess what? It was up 151% into the earnings print. It is so over-owned at this point, and maybe it justifiably so, but it's over-owned, and maybe that needs to work itself through. JP Morgan, it's up 21%. It is absolutely beating every other bank this year to date, and it is also over-owned. It's kind of like the safe way to play financials. So you have to look for, maybe you want to look for these names in particular for a pullback to buy, but I think you find these other companies that are saying some pretty good things. And that's like Bank of America. That's like Truist. That's like Broadcom. So I think there's opportunities out there.